China has got to be concerned, and they are. So the Chinese Politburo, which is a direct influence on the stance of the People's Bank of China, the PBOC, stated that it will embrace moderately loose strategy for monetary policy in 2025. And the move marked an aggressive shift from the characteristics prudential, sort of a prudent approach or stance since 2011. Foreshadowing more fiscal stimulus, the government also pledged to support property and equity markets next year, magnifying their signals that the government will accelerate its counter-cyclical support to China's recent economic struggles and to maintain ambitious 5% GDP targets for the next year. The decision extends the CCP's growing efforts to stimulate the Chinese economy following muted reactions to previous policies, but the market also sees the statement as a countermeasure to potential tariffs of 60% out of the US following President-elect Trump's inauguration next month. Evan, what's China got to do?
So, as you've already said, this is going to be the biggest change in 14 years in terms of the output stance. The caveat is this, as they also themselves pointed out, there has been muted response to what's happened since basically Golden Week. So before Golden Week, there was a reaction to the stimulus package they put in. The 3 packages since has been really almost laughed at. It's been as low as a quarter of what was expected by the market. So they have now lost patience with what they're doing, clearly. Not only that, this goes really against Xi Jinping's major stance. So not just the changes to the policy for the PBOC for the past 14 years. It's the financial stability package that he brought in 2017 and 18 that he's going against with this change. So
he has to move. He's got no choice.
So to point out how much a reaction this statement had, because as I said, the difference between having the Publico do this versus we've seen the economics board come out and say what they'd said in the last 3 is that this is realistically the voice of the CCP. These are the guys that actually matter, the rubber stamp policy. And as we pointed out, the Central Economic Working Conference, that's just the rubber stamp, what's been said. So this will happen. And that's why, for instance, when we're doing this on the 10th of December, the overnight reaction in the US was BHP and Rio, for example, jumped up 4.5%.
I was going to ask you, what's the impact to Australia?
The Australian dollar jumped 1.5% off the back of it. This is a step positively for us, whether you like it or not, whether you agree with it or not, doesn't matter. That is what this is seen as, and that does need to be met with a little bit of excitement from the point of view that we can possibly see us being, inverted commas, lucky again, because our main trading partner is having to ratchet it up their efforts to get their economy going.
So property equities is all about wealth effect and that sentiment. That sentiment's really important for that domestic consumer. There are 1.3 billion people in China. They need them spending. And so this is off the back of that. Now, their one trump card has been inflation. So they are able to do this because they're not in any risk of having inflation in their domestic economy. So they pull this trump card out, they throw the stimulus in there and they see where it lands, because they really have no other choice.
Correct. But their risk is, as somebody's starting to point out more and more, is that are we seeing the new Japan of the 90s and the 2000s?
It makes logical sense. You've got an aging population. The demographic profile works exactly the same way.
The growth profile,
so the whole
thing.
The golden era of China, I think you're right there. And I mean, ultimately then that's the political stability story that might play itself out over the next 30 or 40 years in
Correct.
China.
So
and
I think it's a really fascinating thing is to say...
It is very fascinating.
Is China Japan 2.0?
Yeah, good call. Okay, so let's look at the key takeaways. Obviously, that stimulus is a way of China's 2025 package around moving their domestic economy. The tariff story, Trump 2.0, we'll keep saying it. It's going to impact more global trade. We saw the G20 conference last month also focusing in on making sure that no one else sort of, if Trump's bluff or if Trump makes that call, everyone else tries to keep their heads, be sensible about what they're doing and not counterbalance or basically counteract in terms of also introducing tariffs. That becomes a tariff war. That's not good for global economic growth. So that's also interesting. Now, the positive, could it be a positive net for Australia? Well, certainly when China needs our iron ore, when China needs our raw materials, that's good news for us in terms of our overall economic activity.